Hey everybody, Real Estate Ninja here. I hope you're doing well. You know what is not about to do well? This. But I can't give it away all yet because you're being lied to in the mainstream media. There's a story out of Market Watch that says here, buy Home Depot stock because the housing market is bottoming, analysts said. Now, it's not just about the housing market. We're going to talk about Home Depot stock specifically. Now, let me just say this first. I love shopping at Home Depot. I just love it. I love needing to find someone and can't find them for help, but I really do like just shopping around at all the things I can't buy now because of inflation. But let me say this, you are being lied to and I'm going to explain it, and it's so easy to spot this. You know, the other channel I have, Economic Ninja, it blew up when I used to do stories out here as lumber prices are going up. I'm like, don't worry, the lumber futures are going to crash. They're going to crash this on these dates, and this is why. It's not because I had a crystal ball, it's because I use historical patterns and trends to be able to show you what's coming into the future. And this is no different. I'm going to show you a stock, the Home Depot stock chart, and a straight up lie that Market Watch is telling you today, all right? And the reason why you have to watch this, it's not about buying and selling stocks. You know, I'm not giving you any financial advice, right? But I will tell you this. This is going to lead a lot of people down into the gutter financially. All right. Home Depot the stock is a great bellwether indicator for the health or the lack thereof, of the real estate market. But it also tells a couple other things. So check this out. It says Wedbush turns bullish on Home Depot stock, which tends to materially outperform when interest rates decline. Okay, that line, it's the second line right underneath the title, is a straight up bald-faced lie. Okay, I'm gonna show you why. In 2000, in the 99s, Home Depot stock was on fire, and I'm going to show you some actual stories one from 1999 and then what was crazy in 2000, and this is why. Check this out. In the year 2000, interest rates started to fall off of a cliff. We were going into a recession. We had the dot-com bubble bust at that time. We had a lot going on, and if you go back and just type in Fed funds rate chart and go back and start at the year 2000, you will see that rates fell off a cliff. The Fed was lowering rates so rapidly because everything was going to crap in a handbasket. That was actually when I started buying real estate because everyone was afraid to dive into the real estate market. Interest rates are coming down, and I saw an opportunity to start buying up properties, refinancing them, buying it, getting them zero down, and knowing that people would eventually, interest rates would level off, which they did at pretty much nothing, and then take off again. And that was going to lead to a housing boom. Now, this chart is a chart of Home Depot stock where it peaked exactly in the year 2000, okay? And then cratered for years going into what, 2003. Mid-2003 found a bottom right there. Interest rates, if you go get a Fed funds rate chart, no, you know what, screw it, we'll do it live. Watch this. It's so easy to find this truth and that the media is lying to you. Fed funds chart. Let me just do this. I'm doing it live. I'm doing it live. All right, here we go. We're going to show you. Here we go. Fed funds chart. The year is 2000. See where it peaked right there and it leveled? And then from mid 2000, interest rates plummeted from a point where the Fed funds rate was 6.5% in the year, it was in 2000, like right towards the end of the year 2000. It went from 6.5 to where it bottomed in 2002 at 1%. Bam! Now, Market Watch just came out with a story saying that Home Depot stock does really well. No, it doesn't. When rates lower. It does not. Home Depot stock peaked right here when interest rates are right there. That's awkward. Right there. It fell right alongside interest rates. So the first line of the story is a bald-faced lie. Do you understand this? Please understand this. The media is lying to you like crazy. That's why channels like this, they ain't getting shared. They don't want you knowing this. They want you buying stock, they want you buying real estate at the top while the funds are unloading everything. It's akin to what Jim Cramer said last year, 2 weeks before Silicon Valley Bank collapsed. He said, I think you should buy stock. I think it's a great time to buy stock. The mouthpiece told you what to do, all right? So let's go back to the story. Check this out. So I'm going to read just a little bit of the bald-faced lie stories and show you historically what happens in the real estate market. Nobody is telling you this. I'm like that guy that's telling you, hey, everything's collapsing, and then you laugh about it, and there'll be a movie later because we have all the proof. I made it all. Did lives. I've made like 1,800 videos on this over 3 years. All right, check this out. Shares of Home Depot stock rallied on Wednesday after Wedbush turned bullish on the home improvement retailer, citing the belief that housing market fundamentals are bottoming. Okay, they are not. There's gonna be this slight little uptick into the spring, and then everything comes crashing down. Analyst Seth Barsham, which I'm gonna tell you right now, Seth, your education has failed you, raised his rating on Home Depot stock to outperform after being at neutral for at least the past 2 years. He bumped up his stock price target by 15% to 380 from 330. So, a bunch of lies. Okay, he says, we believe fundamentals are bottoming and expect a return to growth by 2H of 24 on the back of lower interest rates, improving housing trends, and rising consumer confidence. Basham wrote in his notes to clients. I'll bet you Basham wasn't even in high school when Home Depot stock was cratering at the same time the Fed was plunging rates in the year 2000. I'm just gonna guess. Somebody Google real quick. Let's go back and get his name. Seth Basham, B-A-S-H-A-M. Google it. He's an analyst for Wedbush, W-E-D-B-U-S-H. I'll bet you he wasn't even in high school. Or maybe he was in high school and he didn't pay attention. But it's not very hard to find out that in times, and go back and look what happened when the Fed lowered rates, collapsed rates in 2007 to 2008, and look at Home Depot stock then. It crashed then too, but hey, it's cool. This guy works for some big firm. All right, I'm just a dude with a broac and a dream. All right, so check this out. So we see that rates dropped. Oh, here you go. Let's do this again. Let's do this again. So I'm going to show you again, because Seth from Wedbush says that Home Depot stock does really well when interest rates fall. Well, I just showed you that that is not the case from the year 2000 to the year 2003. So let me show you now. We all know that the Fed dropped rates aggressively from 2007 to like maybe mid 2009, right? Let's look at Home Depot stock then, because it really, if you want to call this a recovery from 2000 where it comes down and whoo, look at Home Depot stock, it's so good. That's during the housing boom, right? Well, look at this. This is 2008, everybody, when you know, the Fed was lowering rates really fast and trying to save the economy. Look at what happened with Home Depot stock. It went from, stand by, it went from $37 down to $13. It fell by over half. Weird. It went down. Look at that, Seth. It's weird. I just Googled the chart. I'm not even fancy. I didn't go to Coolidge. It went down over half while the Federal Reserve was lowering rates because real estate was crashing, because people were losing jobs. That's what's coming right now. It's actually happening right now. You see, these cycles actually take many years to go up and many years to go down. It's crazy how I got to explain this to a lot of people. I mean, just read the comments. All right, so check this out. So let's do this. We're going to go back into time, yonder, into this place's history, Home Depot. Check this story out. You're going to love this. This is from February of 1999. Now, to give you a little backstory, Home Depot stock was doing this in the 90s. Ooh, just cruising up. I know. I'm trying to explain this to all the people that listen to Market Watch right now, because I'm going to break it down for really simple terms. Home Depot stock was just crushing it. All right. This is from February of 1999. It's entitled Home Depot Builds Momentum. Get ready for what the next title 6 months later. Builds Momentum. Western Digital's murky data. Murky's right. Stock exchange gives readers a chance to listen as it's, oh gosh, come on. Okay, here we go. Up first, Home Depot. Because, boy, stories in the internet in 1999 were written funny. Here we go. Mike. Yeah, Home Depot is the epitome of a category killer, meaning it's so big and successful that it's been knocking much of the competition out of the box. Jim says, true. Founded in 1978, Home Depot has now 720 stores and expects to have more than 1,300 in the next couple of years. And it's grown many other chains. And they go on to talk about the stock and like the stock kicks butt, right? Check this out. A mere October 12th of 2000. So that's what? A year and a half? A little over a year and a half later. This is the title out of CNN Money. Home Depot stock sinks. Shares plunge after retailer warns it will miss Q3 and Q4 earnings forecasts. Well, wait a minute, that's weird. They came out with that warning this last Q2. They actually, or Q3, right in between Q2 and Q3, they started saying, you know what, things are sinking, the customers changed, and I've done stories about how they actually used the exact same verbiage they did during the housing bust in their quarterly earnings this time. They're actually losing customers. Customers are buying less. They are changing their habits. It's because we're going into a collapse. And this one's a real big one. If you think the Great Recession was big, you haven't seen anything yet. So if you're not getting ready for this, I don't know what to tell you. But history tells us exactly what's happening. And what's happening right now is you got companies like MarketWatch out there with some kid that wasn't even probably out of high school when the last crash happened, telling you right now where to put your money. And he's actually giving you financial advice. I ain't giving you financial advice. I'm just telling you the guys that give you financial advice are complete idiots. And here's the truth. Most people don't even know that 99% of those giving you financial advice are not fiduciaries, which means they do not have an obligation in your best interest to tell you where to put your money. If you don't have fiduciaries, you need to seriously pull out and think about right now what you're doing with your money. That is advice. A fiduciary has to work in your best interest, not sell you some bundled package and say he's a stockbroker working at Charles Schwab. Sorry, I had to say that. All right, my point being is, I'm just a dude with a bro in a dream. And I'm going to tell you what, I honestly believe that this channel and the other channel are going to explode this year. Why? Because it's just right. You know, you don't have to be super duper smart to be wealthy. Thank heavens. I barely made it through high school. I shouldn't even made it through high school. But I made my first million when I was 25. And that's not bragging. I say that to help people and encourage you. You all have the ability right now to think outside of the box and see all this crap that's going on. Look, I hope you have a great day. Thank you so much for everyone that hits the subscribe button. The Real Estate Ninja is out.